Good afternoon, everyone, and welcome to our January 2021 Hot Stock panel. My name is Glenn Tompkins, Senior Instructor here at VectorVest. Always glad to be here for our Hot Stock panels. I will be your host for today. Also with me, I have two of my most esteemed colleagues, Patrick France and Clayton DeBerte. They will be joining me today for our Hot Stock panels, and that's what it's all about. A little bit about me. I've been here for 16 years with VectorVest. I'm primarily caught up in the Jockey Club in the mornings, Monday through Friday, which is our trading rooms. I host the Hot Stock panels every month, and I also have a segment on YouTube called Trending Thursdays where we look at stocks that are making the news. So primarily that's what I do. I think for the upcoming year, I will be doing more YouTube content. So stay tuned for that as it happens. All right. So that's a little bit about me. VectorVest, for those of you who are new, VectorVest has been around over 30 years. We analyze stocks better than anybody else out there. And we've got logarithmic calculations. That's a good word. I don't know, logarithmic. Listen, they're mathematical equations to help you to see what a stock is worth, if it's going up or down in price, if it's the right time to buy or sell or hold. All right, so it's beyond what you get here on YouTube, just in general about, hey, buy this stock, or I'm going to buy these top 3 stocks. It's interesting how those people do that, and they don't tell you how they find the stocks or what, or if it's a long term, or if it's the right time to get in, or when to get out. So we pride ourselves on being able to take investing to the next level to give you the information you need, not just data to listen to. All right, so that's what's going to be on display today. Hot stock panel. The 3 of us will come up with stocks that we like. We'll tell you why we like them. We will give you clear-cut signs to know if it's okay to buy now or not, and if so, when to get in and when to get out. All right, so again, we go above and beyond what a lot of content here on YouTube is all about. We really pride ourselves on that. We talk about market timing from a market timing perspective, and if it's okay to be in the market or not in the market right now. Currently, our analysis shows that the market is still toppy, but I think that everybody knows that the market at this point is overextended. When does the top happen? Well, I'll give you the secret of knowing when the top happens. Everybody come in real close. Everybody come in real close. The secret to knowing when the stock market is topped is when it stops going up and it starts going down. Boom! That's the secret. That's the secret right there of knowing when the market is toppy. But we have an indicator that lets you know when the market is toppy. Again, my colleagues will introduce themselves before they start to talk about their stocks, so you get a feel of what they do here at VectorVest. I love the crew that we have here because of the myriad of different things that we do. Patrick does a lot on Facebook. Clayton and I do a lot on YouTube. So put that together. I think we've got the social media platform well in hand to keep you guys on top of what's going on. If you like the content, especially if you're new, don't be afraid to hit the like button. All right. If you're also new and you haven't subscribed to the channel, we've got an aggressive goal this year for subscribers to the channel. So if you like what you see, if your subscribe button at the bottom of this video is still red, that means you haven't subscribed to the channel. All right. We invite you to subscribe to the channel, and don't forget to smash that bell button so that you'll be alerted and notified of new content that comes up here. So it's not only the hot stock panels, there's a lot of content that we put on the YouTube channel. If you want to stay on top of that, by all means, do so. One thing that I'm inviting people to do this year for the YouTube channel, and I'm thinking that Clayton should think about doing this as well, invite somebody. All right, the YouTube channel is free. If you like the content that you see here, invite somebody to come to the YouTube channel. Give them the opportunity to decide whether or not they want to subscribe to the channel or not. But you could change a person's life, especially in the investing world, if you invite somebody. So I challenge every one of you out there this year that when you do come to a YouTube event here on YouTube, invite somebody. Each one, invite one. I think that that would be a good thing to take a look at. We will be giving away a mug today. The cutoff time is going to be at 2:45. The keyword is mug. Sigh, we're going to watch the chat just go ballistically crazy. If you want to be in the... Joff was the first one. Interesting. If you want to be in the drawing for a mug... Do I have one of my mugs sitting over here? Joey, why do you always take my mugs? I don't have a mug.
You have everything else in here.
By the way, Joey is our producer. Say hi, Joey.
Hi, Joey.
All right. So we got if you want a VectorVest mug, we're going to give one away. And... if you are not a winner of the mug, if you look below the video, we have our store. You can get a shirt or a mug and purchase it. All right, so the mugs are coming across the screen big time. I knew it was. Did really somebody put a VectorVest VV mug for life? Really? Why did you take it away? All right, so VV mug for life. But at 2:45, Joey will pick a name for us to give a mug away to. All right, now we're ready for the stock picks. I'm already 4 minutes ahead of schedule. Look at that. I'm 4 minutes ahead of schedule. So thank you for the chatting in so far. Let's bring us all on so that we can take a look at the stocks. If you go over to our watch list that we've got set up for today, what will happen is each one of us will talk about the stocks in this list, our stocks in this list. We'll give each other an opportunity to talk about a value add to the pick. You know, we may not all like the same pick, and that's fine, but we'll give our own insights behind it as well. All right. So these are the 7 stocks for the new year, starting from Tesla all the way down to XRoth. Each one of us will give our insights on the stocks. And I'm going to start off first. And the 2 stocks that I picked, I think were germane to the existing situation in a changing administration. All right. We know that on the 20th of this month, we'll have a new president. That ain't political. It is what it is. So in case anybody's jumping all over me, blah, 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 don't care. All right. It is what it is. And with that information coming up, I think that there's going to be 2 industries that are going to be rocking and rolling. As we've already seen, the clean energy space has been moving, so I picked a clean energy stock. It's going to be interesting. It's not the clean energy stock that you probably think I should have gotten into, but that's beside the point. And my other stock is we're looking possibly in the future for a decriminalization of marijuana. Say decriminalization 10 times fast. Patrick, can you say it 10 times fast? You can. Don't say it anyway. But I think there's going to be, a push for decriminalization of marijuana. So my second stock was GRWG. I'm going to start off with DACO. Now, interesting, when you think about right now clean energy, most of us keep thinking about the EV space, the electric vehicle space, because there's a lot of action going on in that industry. But wait a minute, clean energy is not just electric vehicles. Clean energy looks at things like solar, like wind, like water, all renewable energies. And DQ is in a different space within clean energy, specifically looking at solar. They create a polysilicon for solar cells. As you look around your neighborhoods, I don't know about you, but I'm finding more of my neighbors have solar cells on the top of their homes. And I think that that's going to be a recurring something that's going to happen more and more and more and more. Thus the reason why I think from a good pick for this year, solar energy outside of the EVs and all of that, I think you should start looking into solar, wind, water, all of the other renewable energies, because this will be the year that they should take off. And as far as it's a green energy play, and I think a good word to look forward to going into this year is going to be environmental infrastructure. I think that those are going to be hot words for this year. Environmental infrastructure, all right? Because you're going to have to build the wind farms, and you're going to have to set up all the ways of utilizing water, and of course with solar. So keep those words in mind. As I look at DQ, the stock is trading at $77. We assign a value of what we feel the stock is worth, and it's sitting at 101. This is one of those stocks that is an undervalued stock, which is, in this case, a little hard to find because there's so much money in the stock market. Money goes where money grows. Nobody's putting money in the bank because interest rates are so low. So interesting to find a good stock in that industry that is actually undervalued. Then we look at our other indicators, our core indicators like relative value, a stock's upside potential as compared to a AAA corporate bond. All of these indicators, RVRS, RT, VST, and CI, are all cast on a VectorVest scaling between 0 and 2, where above 1 is favorable. Relative value on DQ sits at 1.46. This tells me that this stock should outperform a AAA corporate bond by 46% over the next 1 to 3 years. For good stocks to look at, relative value is a good indicator to look at. Good upside potential. And I think that going into 2021, you want to find stocks that have good upside potential. Relative safety is an indicator of risk. Relative safety looks at the consistency and predictability of a company's financial performance. It takes into effect all of the things surrounding the financial health of the company. And on that scale between 0 and 2, above 1, the stock is not a risky stock as well. And key, RT. It's relative timing. This is our technical indicator. RV and RS are our fundamental indicators. Relative timing tells me if the stock is going up or down in price right now. On that scaling between 0 and 2, the stock is definitely in an uptrend. The higher above 1 it is, the faster in an uptrend it is. So that was one of my picks for a lot of the different reasons that you see here. Undervalued, good upside potential, not a risky stock, going up in price. Our master indicator, VST, which looks at the value, safety, and timing into one indicator on that same scale between 0 and 2. Notice that in this list of 7 stocks, DQ happens to be the second highest stock by VST. So that's a good all-around stock. CI is the comfort index, the stock's ability to withstand long and lengthy price declines. Every stock goes down. Right? High CI stocks tend to go up more than going down. So that's a good perspective of a stock that's got a consistent movement up. Earnings is the engine that drives the stock's price higher. DQ has an earnings per share of $3.56 on a $77 stock. That's not bad at all. And they grow their earnings at a clip of 22% a year. When we look at the earnings number in the VectorVest software, anything that's got earnings in it is projected out 12 months. It is a forecasted earnings. Why is that important? Because what I'm saying as far as earnings per share on DQ, at this time next year, their earnings per share should be sitting at $3.56, and they're growing it at a clip of 22% a year. Stocks a buy. So that's my first analysis on DQ. Grow generations. This is in that space of marijuana stocks. You got to grow it, right? You got to have the tools to grow it. They retail hydroponic and organic gardening products. So in order to have a good crop of marijuana, you got to grow it, right? And Grow Generation provides all of the tools needed for growing good weed. I guess that's for the lack of a better word. I mean, you don't want crappy weed. You want good weed, and Grow Generations gives you the opportunity. They sell lights. They sell the nutrients, the growing systems, the seeds, the humidifiers, the dehumidifiers, timers. You don't want it to be too hot, too cold or something, so you got to put the right time. You got to time that stuff.
How do you know all this stuff?
Listen, don't worry about how I know this stuff. I heard it from a friend.
Okay.
All right, I heard it from a friend because I don't know about this personally or nothing. They also have hand tools so that you can dig up the right way. You got to dig down. Listen, and then they got water pumps and irrigation systems. So everything that's needed to grow a good crop of marijuana, Grow Generations provide. You know what I like to look at Grow Generations of? The Lowe's of marijuana. Think about that. That's the place where you go to Lowe's and you get all the stuff for your house. Well, grow generation is like the lows of marijuana. So you can go to one spot so that you can grow a good crop. So that's what grow generation does. Now, interesting, as this field has been growing, it's been outgrowing its value. It's been moving up so much higher than what we feel that it's worth. So this one, unlike DQ, is an overvalued stock. Doesn't make it a bad stock. It just means that people are willing to pay a premium for it. Why? Because of the administration change and knowing that there's a possibility of decriminalizing marijuana, people are jumping into it. Jumping into it, driving the price higher than its value. That's why the stock is overvalued and people are willing to pay a premium to own it. Relative value, the upside potential on it, not as good as DQ, but definitely above the value of 1. Telling me that grow generation should outperform that AAA corporate bond by 29%. Safety, not as safe as DQ, but still at 1.06, above the value of 1. A lot less risk involved in getting into a stock like this. And look at that. RT does tell me that the stock is going up in price. The VST makes it, out of the 7 stocks, it's number 4, all right, on that master indicator. And the stock definitely goes up more than it goes down with that comfort index. Look at this, though. They grow their earnings at a clip of 43%. Now, I like the earnings per share a little better on this stock, $3.56 compared to that $76 price. On Grow Generations, trading at 47 with an earnings per share of 39 cents. Not as good, but still in the positive. And they're growing at a clip of 43, which means that it could only get higher. It should only get higher, and that stock's price should rise. So those are my 2 stocks. I'm going to go look at them on a graph now. I wanted to give you a basic understanding of why I like those stocks. Again, 2 hot industries coming into this administration. I think a lot of money can be made looking at these 2 stocks. So I'm going to right-click. I am going to view the stock graph. All right, so now you know why I like it. I'm going to keep it on a 1-year graph, and I'm looking at some specific things on my graph. 1, a good middle-of-the-road moving average. I'm looking at a 20-day exponential moving average. Notice that as the stock's price goes up, it serves as a really good line of support. Today is a down day. Would I buy it today? No. Do I like it long-term? Yes. But I would time the trade. When would I get in? I'd get in about 12 cents higher than that high. The high yesterday was sitting, that's not yesterday, that's yesterday. The high yesterday was sitting at a price of $85.54. I would put in a buy stop order at $85.66, which is 12 cents higher than the high. That would be a good entry. And you know something? A graph is worth 1,000 words. The graph is definitely moving from the bottom left to the top right, a little bit of a sideways move here, but look at that stock's price clearly above the 20-day exponential moving average, down day to day. Volume is pretty steady. I'm going to take off relative timing. These are the other things that I want to look at as far as the stock. Look at the earnings per share. Rising. Look at the earnings growth rate, rising. Look at the stock's price for the most part, rising. And look at even the pullback on the stock. Utilizing that 20-day exponential moving average is a good opportunity to tell you that the stock has still got some upside. Now let's talk about it on the other side. When should I get out of the stock? Well, I think a good rule of thumb to getting out of this stock is still utilizing this 20-day exponential moving average. If the stock's price closes below it, that's a good opportunity to take your profits off the table. All right, so DQ in the clean energy, specifically for solar, I think that that's going to be a hot industry going into the year. That's why I liked it. And now I'm going to allow Patrick, or let Patrick take a look. Tell me what you think about the stock, Patrick.
I like what I see. I would use that pullback to that double top it had just about a week or 2 ago, as a potential entry into, maybe a small position, and keep an eye on that support floor that you have there even lower, because clean energy's been on a run all throughout 2019 or all throughout 2020, coming into this year, and it's still continuing to run. So eventually people are going to say, hey, I've got really good profits. I'm going to start booking it in, and you're going to see a significant pullback. And that could be, if it hits that second level of support all the way at the bottom there, that could be, the real big buying opportunity to capture some really great gains.
All right. Clayton?
Oh yeah, Glenn. I actually, when I was going through and looking at which stocks I wanted to bring to the table today, DQ was one of them that I was like, oh yeah, I could definitely use this stock today. So I agree. This is an excellent stock. It could prove to be an excellent opportunity. I'm not really hoping or looking to see a pullback that far down, back down to around the $40 a share range. I think is where that support and resistance line was, or those two levels of support now. But like you said, you definitely want to see this stock hitting a new high. We're not going to recommend buying a stock on its way down, because if we do, that's like trying to catch a falling knife. You don't know exactly how far back it could pull back, and we don't want to get into a trade where we're losing right from the start.
All right. So that's stock number 1. I'm going to get ready to go to stock number 2. There's GRWG. Same kind of scenario. Look at that move, bottom left, top right. Notice that both of my stocks, I am looking at 1-year graphs. I think it's ideal from the situation of trying to look for stocks to buy going into the new year. Now, interesting about this one, 2 down days in a row. All right, coming off of that high, would I pull the trigger on it now? No. I do like it long term. Again, looking at the long-term 1-year graph on the stock, I do like it. Good move on the 20-day exponential moving average. Keeps you in that trending stock. Even as it comes back to that line, I still like it. Same kind of scenario. I would go to that most recent high of 53 to 43. I'd go 12 cents higher than that. I'd put it in my buy stop order. The stock historically over the last year has definitely been moving up. Now, a couple of things that do catch my attention. Well, one main thing, the earnings growth rate, positive as it is pulling back just a little bit, but still higher than it was a year ago. All right, so I do see that. But the earnings per share itself is still growing and getting better. But the earnings growth rate, I'd like to see it continue to grow, but definitely healthily above where it was 1 year ago. So I like that entry point. Again, I'd look at 12 cents higher than the high. If there's anybody out there who's in it, I would use either the 20-day exponential moving average as a way to get out, or if it goes below this support level of 36.78, that's probably another good opportunity to get out of the stock and take your profits off the table. But right now, I would wait for the stock to go 12 cents higher than the high. But there's probably many of you who are currently in it. I'm giving you the opportunity to know how to not give your winnings back right now. All right, Patrick.
Yeah, so before we take a look at this, you said this was like the Lowe's of the marijuana industry. You do realize Lowe's is number 2 behind Home Depot. So who would be the Home Depot there?
No, I'm a Jimmy Johnson racing fan, so it's the Lowe's of marijuana.
Okay.
Oh, no. Oh, yeah. That is strictly because of Jimmy Johnson. All right. So I'll put that out there. That's strictly because I'm Jimmy Johnson fan.
Fair enough.
Okay.
All right. So only thing, marijuana has done obviously really, really well since the election. I like the play. I think still at this stage, it's still a buy on the rumor, sell on the news kind of trade. Doesn't mean you can't take advantage of it for now, but like we saw when Colorado started legalizing it a few years ago, we had a bunch of people, pushing prices higher in the marijuana industry. And then it tanked after that because they realized there was no actual fundamental growth behind it to back it up. Even if they do pass legislation, which is very, iffy this year, I think that, it's going to take a while to get those numbers to back up the price that it has. So this would definitely be a, great trade for now. Buy on the rumor and sell on the news kind of trade.
All right. Clayton?
Yeah, I just want to point out this stock's, obviously it's been performing extremely well over the last year. If we just look at the equity curve, bottom left to upper right, but even more so, Glenn, I think you get it's a 20-day exponential moving average on there. I mean, look at the level of support that moving average is providing. Every time it touches it, it shoots up a little higher and comes back down a little bit and shoots up. So if we do see this, if we do see GRWG pull back and touch that level of, well, I want to call it support, but touch that moving average again, and we start to see it bounce off, that could also be a pretty good entry point to get into this trade.
All right.
And Glenn, one more thing.
What?
What's the volume is always what? What do we say in jockey
Volume
club?
is conviction.
What has volume been doing recently?
Moving a tad bit sideways,
ahead,
Patrick.
Be careful of that. That's the one thing that also concerns me is that volume, it had a big spike a while ago, but compared to what it was at these prices, volume is definitely a lot lighter than that first initial run up.
I'm going to throw a 20-day exponential moving average on volume. I think for the most part, you're right. I'd like to see volume rise, but it's staying in line.
But go back to that 1 year.
That's when it spiked. Then you're probably talking about Colorado and stuff at that time. That's when it spiked. But even overall, it's okay. I'll leave it that way. It's just okay. So I'm with you on that. I am with you on that. I got you. All right. So let me close out of the graph. And Patrick, I'm going to give him control. Patrick, it's on you. Let's talk about your two stocks. But don't forget to tell them who you are and what you do.
All right. Hey, everyone. My name is Patrick France, senior instructor here at VectorVest. Been with VectorVest for about 10 years now. I've started off in support, started trading when I was 4 years old, and currently working for our mobile platform, teaching people every single week on Thursdays at 11 a.m. Eastern over on our Facebook page, how to utilize the stock advisory app, new tips and tricks, how to trade. So if you're not familiar with that already, make sure to head on over there tomorrow at 11 a.m. Eastern as we go live and do another session here with that. Also, as Glenn was saying earlier, he gave you guys a challenge of inviting one other friend to join us on that Trending Thursdays. I'm going to give you guys the same challenge. Head over to our Facebook page, tell your friends to join us, and get one extra friend to join us every single week. We're continuing to grow that community. It's been great. And if you haven't already done so, make sure to head over to the Facebook page, like the page, and turn on notifications because we're almost there to our goal of 30,000 followers, and then onward and upward from there. So with that, let's go ahead and jump right into it. So my two stocks here today are going to be MUR and XROF. Obviously, love XROF. It's been a hot stock at least twice in the last 3 or 4 months of last year. And, it's taken a little bit of a breather, but I see some good signs that I liked here, which is why I brought it up for today. So if I go ahead, just highlight these. And there we go. We'll start off with Murphy Oil. As you guys can see, it's not great fundamentally because oil's been going down over the last 4 years. So therefore, the RV, RS are going to be below 1, telling us that it has poor long-term potential and it does have additional risk associated with it. But we all know money goes where money grows. And right now with the RT of 1.89, it tells us it's in a really strong short-term uptrend. And I think we could see oil continuing to go up, for the foreseeable future, at least for this year. My second one is going to be XROF. Once again, more of a speculative play, poor RV, poor RS, but high RT, strong momentum, and the company has a lot of potential to become a pretty big stock over the next year and even over the next 4, 5, 6, 10 years as we start to go more into clean energy and electric vehicles, electric motors, that type of field. So let's go ahead and we'll graph these real quick and just change my layout here. Let's see, there we go. And I know Glenn was saying 1 year. I'm going to focus more on a 3-month so that way we can see it a little bit better here. And I'm going to zoom in to XROF, our very first one. So as we all know, extra off has been going up really well throughout the course of last year. This year, ever since about November, coming in December, extra off has been kind of dormant, where we've seen, a slight sell-off, pullback, just some sideways action for a while. Well, the reason why I wanted to add it to my stocks this year or for today is because not only, is it hard to find a stock that is oversold, that has great potential, that fits in these kind of fields, but we also noticed that we're potentially hitting a higher low here today when compared to a week ago. So this could be a great early opportunity here. At the bottom, we have DPO also hitting a higher low, confirming what we're seeing with that price action. And then below there, the stochastics is in the oversold territory, but slowly starting to creep out of there. So what I'm really looking for is, follow through for tomorrow. Also, stochastics crossing above that level of 20, telling us that, this sideways trend may be starting to dissipate. We may be seeing a higher low, which leads to higher highs. For an entry point, if we get follow through tomorrow, that could be a great entry point. Or if you're a little bit more conservative, you want to wait for more consistency, obviously, you could wait for, a breakout of these highs here. Let's go ahead, horizontal line. So we have a level of resistance right around can't really tell what that is, but 390, 395, somewhere in that zone. So if we can see that break, get to that $4 marker, the sky's the limit from there. I could see a big run coming after that as well. So, one of the things that was the hardest about today's objective of finding stocks for 2021 is when I was going through this, I found so many stocks that, look good, had potential, but really just didn't seem like right now is the best time to get into them. There's a lot of stocks that are overbought, which made this, challenge today even harder. And I like the fact that extra off is in that clean energy kind of field, and also oversold, looking like it has potential to, catch up or start to rally from here. So Clayton or Glenn, one of you guys care to chime in?
Yeah, I'll go ahead, Patrick. Actually, I did a video on XROF, XROTech. I think it's been several weeks now. It might have been a month or two, maybe 2 months ago. Probably sometime around that time we saw that first pop, maybe shortly before, shortly after. But I believe that this is going to be, and this could be, an awesome company in the electric vehicle space. And I believe they're out of Canada, and that's why they've got a little bit longer ticker symbol there. So I believe they're originally listed in Canada. But yeah, I'm completely on board with you. And I do notice the exact same level of resistance that you're showing on there. And like you were saying, this could be an excellent opportunity to get in slightly early. So if you're a trader and you're in to get in for those profits, if we do have that follow through tomorrow and we see some more upside, like Patrick said, this could be an excellent opportunity to get in a little early. But if you're a conservative investor and you want to wait for that upside confirmation just a little bit more, when it does break that resistance level, I think he said it was somewhere around $3.90, $3.95, somewhere around there. I mean, once it breaks through that, it's most likely going to shoot even higher, as there's no resistance for it to worry about pulling back on, and we can actually see where the bulls want to take it. So if you're a prudent investor, if you're a conservative investor, maybe I would wait until we get to that level of resistance up there. But if you're in it for the trade and it looks like this is setting us up for a pretty decent trade here, I think that we could get in as early as tomorrow if we were, to see that confirmation and see that follow through.
I was one of the people in the office that actually owned XROF. I was up as high as like 92%, and I took my wins off the table at about 60%. And I'm waiting for a good opportunity. This is an industry disruptor. Steve Chappell has said that on more than one occasion, that this is an industry disruptor in that they are really working on the electric motor as a whole. And with all of these electric vehicles coming out, this is going to be a stock. I'm with Patrick. This is going to be a stock that's going to look. You're going to look back a couple of years from now and go, "Holy smokes! It was only $3.22."
Yeah.
All right, so this is definitely. I'm with Patrick, and I like the idea. If you want to get into it quick, if you got follow through tomorrow, do that, or wait until you break out of the high. That's a beautiful high. It's a beautiful level of resistance. Touch, zone, touch, zone, touch. Pretty much, that's a beautiful level sitting at $3.91, and I love it, and I think Clayton's right. If it breaks above that, it's going to go to the moon, Alice, to the moon. All right, so good pick job, Patrick.
All right, and so for our next one, let's see what we got. So Murphy Oil. What I was looking for with this one was specifically looking a little bit more of a speculative play. Something that, hasn't been talked about a lot. I've talked about it a little bit in our jockey club. But oil just in general, with after the elections, I'm not trying to, get into a whole political discussion, but facts are facts that, they've already stated multiple times they want to minimize U.S. oil production, start to focus more on the clean energy aspect. Well, one of the reasons why oil prices have been so low over the last 4 years is because of the U.S. manufacturing, U.S. production of oil. So if that starts slowing down, that's going to give other oil countries more pricing ability, and we could definitely see them push the price of oil higher. So I think getting in early on an oil play is not a bad place to be. With the current or the new administration coming in, specifically stating they want to minimize U.S. production, that's definitely going to boost the price of oil, which is going to help, get these oil companies back and get, some of the profits back in their pockets. Oil's been a great play for a long time. And even without the whole, political aspect of it, oil is still needed for plastics and other materials that we use on a daily basis. I did like Murphy a little more because not only did it have one of the highest RTs out of the top petroleum industry, but it also had almost a cup and handle kind of look to it where, let me use my freehand line here to demonstrate it. You had the cup forming right here, then you had the handle forming right here, and breaking out now above that previous high. It's not the perfect cup and handle, but it's pretty darn close. So not only do we have a very popular common technical pattern from this, but, getting into a little bit of the speculative play, I see oil prices continuing to go up. We're just now starting to see it at the pumps. And, yeah, I don't see oil prices slowing down for the foreseeable future.
Go ahead, Clayton.
Well, I have to say, I don't know too much about a cup and handle chart pattern, Patrick, but I do like that. Very, very nice cup you drew on there.
Thank you.
And, oh, absolutely, man. But, it's almost exactly, we can see that level of resistance there up, too. It's like we're starting to bounce off of it a little bit. I think you got a horizontal line there. I don't know exactly what the price is, maybe around $15. But, yeah, once we do break above that, we can continue to hit higher highs and grow from there. I'm not completely sold on the oil industry and on petroleum, but you do make a lot of excellent points. If we do decide to slow down our production, that does give a lot of leverage to other countries. And if we lessen supply, obviously, if demand stays the same, then the price is going to go up, right? So you do make a lot of excellent points, and looking at this from a trader's point, like you did say, this would be a speculative stock to get into. Yeah, absolutely. I don't see why we couldn't make this a play for 2021.
All right, I'm going to address all of my Trending Thursday people in the room. Well, how much a delay we have? None? Good. How many people, what have I said on Trending Thursday? What moves oil? Type it in the room. What moves oil? Everybody who's been watching me on Trending Thursday knows the answer to this because I talk about oil and been talking about oil a minute. Demand. Now, if we pull off, and I'm going to use Patrick's analogy, if what moves oil is tankers, that's true. I'm going to use what Patrick said. If we start to get to the point where we reduce the production of oil, what will that create? Demand. All right, and demand will be what makes the oil move higher. I like the cup and handle. I'm like Clayton. I can't read that. He just drew it. It looks like stick figures on the graph, but I think that shows the cup and handle, I guess, as well as anything. And if we do cut back on production, well, then we won't have as much supply. And then when we do need oil, it will create a demand. And so I am right with that. Patrick is saying that it's going to move up higher. If what he's saying is correct with the lower production, it will create demand and oil will move. So we've talked about it on many times in Trending Thursday because people are telling me, oh, it's the right time to buy oil. That's all. I look at the screen and just do that. But it might be getting closer now with the change of administrations. That could be happening. So there you go. Good pick. I still like that pick.
Well, also it's to point out, if anybody's from our jockey club, I've been saying oil's been a good opportunity to buy since the beginning of November. Look what it's done since the beginning of November. It's definitely been on a nice steady run here. So there's a lot of motivation. You're right. It does come down to supply demand. I focused on one area that could definitely have a big impact on supply demand. But there's a lot of different factors that, all seem to end with the same conclusion that demand is going to be higher over the next year.
I got you. Yep.
And that could definitely, increase the price here.
All right. Clayton, is that's your second stock, right, Patrick?
Yep.
There you go. So give Clayton access, and then Clayton, go do your thing.
Introduce himself.
All right.
You got to introduce yourself first.
Yeah, I don't know if I can get back out to the watch list though from here. But all right, guys, how's everybody doing today? My name's Clayton. I've been with VectorVest for, I think it's roughly about 9 years now, and I've been loving it the whole time. So I've got not a channel on YouTube. Obviously, we all have the same YouTube channel, but I do a lot of videos on YouTube. I've got a intro to investing series that we do, where if you know somebody that is like brand new to the market, or maybe you're just looking for a refresher on different terms or investing styles, strategies, a lot of the basic stuff that VectorVest teaches as well, like how to find out what type of investor you are. We've got a lot of videos on that. And then more recently, over the last several months, I've been doing a lot of videos on what stocks are trending in the market, which stocks that you should be interested in, and kind of like hot stocks in and of itself. And those videos have been doing pretty well as well. And as I can see here, we have roughly 528 people in this room right now. I can't see how many likes we have, but if you've seen one of my videos on YouTube, make sure to click that like button just so we can kind of see it go up a little bit. And I can see whether or not I'm talking to some people who are familiar with me, or if this is strictly like a hot stocks panel, or what the audience is like today. But as we're going to get into it here, let's see the stock picks that I have for today. They're the only ones left, and I was lucky enough they gave me 3 stocks, right? Everybody else got 2, but they gave me 3 for some reason. So I chose Tesla, True Leaf Cannabis, and Square were the 3 picks. And I wanted to stay within 3 industries. Obviously Tesla, they're in the clean energy, electric vehicle space, and this is on a tear. There's a lot of news surrounding this. It's been doing extremely well throughout 2020. And I do believe that clean energy and electric vehicles are going to be the future. So I think this is going to be, an excellent play, not only for this year, but for the years ahead too. Cannabis, medical marijuana in general. Okay? a little bit more, in my opinion, of a speculative play. I'm still not completely sold on this industry, but I do believe this industry has a ton of potential, especially with the new administration coming in. And, really with the demand is out there, right? I mean, demand for marijuana is out there. So True Leaf Cannabis was my second pick, and Square. If you haven't heard about Square, you know what they do, right? They're mobile payments. And Glenn and I, we did a story on Trending Thursday. Glenn, it's been about maybe a month or two now, right? It's been on Trending Thursday.
On the Zillennials?
Yeah, on Zillennials. So it's been a little while since I've been on Trending Thursday, but we did a story on Zillennials. Now that's Generation Z, and the fact that they're, all on board for mobile payments, digital assets, digital currencies, things like that. So I believe that, if it's not this year, I believe that mobile payments is going to be the future. So with that, those are the industries that I kind of wanted to stick with: clean energy, marijuana, and mobile payments. Now we can kind of get in and look at the stocks just a little bit better. Now Tesla, we all know what Tesla does, right? We've heard of Tesla, probably have a Tesla out there. And
all been cut off by a Tesla driver.
Or been cut off by a Tesla driver, absolutely. Could have been self-automated, though. We don't know, Patrick. I don't know if that guy was actually cutting you off or not. But no, this stock, man, I bet you're pretty happy right now if you got into this stock at the beginning of 2020 and you're still holding it. I mean, obviously you're doing pretty well now. And the stock price is trading around $850 a share right now. It is overvalued, okay? But that doesn't mean that this isn't a good opportunity and a stock that we can be invested in. I think Amazon's been overvalued since birth, right? And it just keeps deciding to go higher and higher. And especially now that Elon Musk is fighting day for day with Jeff Bezos to see who the richest man in the world is going to be, right? And next is the stop price. It's obviously trading above its stop price at $649 per share. It's up a little bit today. I think it might have been down a little bit earlier today. Relative value. Now, I'm not going to go through and explain what each indicator means. Glenn did an absolutely amazing job at the beginning of this, talking about what each one of these, indicators means in detail. But relative value is the long-term price appreciation potential, and it at a level of 1.49. This is on a scale of 0 to 2. 1.49 is a very good level for price appreciation potential. Relative safety, this is an indicator of risk, and at 1.34, I would say this is a very safe stock to be getting into. Relative timing, 1.82. On a scale of 0 to 2, the stock is in a definite short-term uptrend, and when we get into the graph, we're going to be able to see that just a little bit better to see how well this stock has been trending, not only in the short term, but in the long term as well. And VST, this is one of the best stocks ranked by VST in the database. It's obviously top VST in this watch list, and that combines all of the indicators, the RV, RT, and RS. Now, one of the other things I like to look at is comfort index, and like Glenn said, this is the stock's ability to withstand long and lengthy downtrends or pullbacks in price. And obviously Tesla at 1.89 is doing extremely well at this. Recommendation is a buy. Look at the growth rate, though. Let's talk about earnings growth for a second. Highest in this watch list right here. Earnings growth at 45% increase is high. Is it sustainable? That's one of the questions I have to ask myself when we get to a growth rate that is, around this level right here. Is it sustainable? Well, personally, I believe that the electric vehicle market and clean energy has a lot of room to grow still. So I do believe that this earnings growth rate could continue to move higher. Earnings per share, $3.72. Okay, looks great just by itself, but price is $850. So when you compare it to price, it's not a huge earnings per share number, but it's still positive and growing. The next one I talked about was True Leaf Cannabis. Now, this isn't like the lows of the cannabis industry. I would say it's more like the Walmart of the cannabis industry.
Wow.
Right? You can go in,
Wow.
you can go in and get whatever you want. No, but I was doing some research on them. They basically represent themselves as like a from seed to sale kind of company, and they've got a huge presence in Florida. I think it was something like roughly 70 stores that they have in Florida and 76 total stores that they've got in Florida. And, you know, they're doing work too. I think their third quarter revenue was around 135 million or somewhere in that range. So, you know, kind of when I think about cannabis companies and marijuana companies, I think smaller companies. And of course, you know, if you compare it to something like Tesla, $100 million a quarter isn't going to be huge, but it's still, you know, that's a considerable amount, especially in my opinion, for the medical marijuana industry and for the marijuana industry in general. But so they're kind of like a seed to sale company, and they've got a lot of retail locations where they sell all the different types of cannabis products that you can think of. I think they said they had 500 different SKUs. And at a price of $44 per share.
Why do you need 500 different types of marijuana? What the heck?
Well, that wasn't...
One for the morning, one for midday.
And then one when you forgot about the morning.
Wow.
That wasn't strictly marijuana. That was like all their different edibles, their different, I don't know, pipes, whatever. I didn't go through the website and see everything that they sold, but they have 501 different products. Right. My purchase is arriving soon. So this stock is overvalued. The value is trading at $34 per share right now, while the price is $44 per share. And it is up today, okay? 7% increase. Obviously, you know, that's a good gain for one day. So if you're looking to trade, this could be a good stock to trade as well. But when we see the graph, you know, we're going to be able to tell when we look at the graph that this stock has been growing for some time now, and it's been doing very well over the last year. Relative value, it's got the long-term price appreciation potential. Relative safety. Now, relative safety has a lot to do with the size of the company as well. And like I said, marijuana stocks, they're newer companies. They're in a newer industry, and we're not going to see the same level of safety in this industry that we could in other industries. So at a level of 0.93, this is not considered a safe stock. So, you know, maybe if you're a conservative investor, maybe you wouldn't want to get into it, but we'll take a look at the graph here in a minute and get a better idea of what it's been doing. Relative timing, obviously at 1.80 on a scale of 0 to 2, we can see that this stock is in a short-term uptrend. VST is 1.42, which is a very healthy level. Comfort index, 1.76. And we're going to be able to see this on the graph too, that at 1.76, you know, this stock hasn't had too many downturns throughout the last year. And let's keep in mind, guys, the stock market, what's it been doing ever since March, April of last year, right? It's been going up. The stock market itself hasn't seen too many I don't want to say too many downturns in 2020, right? We all know it had an extreme downturn at the beginning of 2020, but since around the March, April area, it's been steadily trending higher at a very healthy pace. And
Wait, would you say that it's getting higher?
the market is getting so high.
Better watch out before it gets the munchies, though.
Yeah, well, we got our MTI to thank for that, right? It'll bring it into terms. Growth rate at 28%. This stock is growing its earnings, and the earnings are positive at $1.28 per share. Now, finally, the last stock I want to talk about before we get into the graphs is Square. Square is a mobile payment company. You probably have sent money to somebody on Cash App or heard somebody say Cash App me, right? So Square, Cash App is Square's mobile payment platform. They're trading at $232 per share right now. They are overvalued, right? I think all of the stocks that I picked today are overvalued. And this could be, you know, because the market has been doing so well over the last year. But we're going to be able to see, like, all of these stocks are up 5-10x from where they were a year ago. So these stocks are definitely moving higher. And, this kind of gives a little bit of validity to what's going on in the market as well. And I know a lot of people are concerned with how high can the market go? Is it ready for a pullback? And when Glenn mentioned that the MTI is at extremely toppy levels right now, this is something to be, I don't want to say concerned with, but it should definitely be on your mind when making investments, especially if they're going to be for longer term. You need to know that there should be a sense of caution, I would say, with the MTI at this level. So the next thing on the list here is the change. Obviously, it's up about 2% today, so doing very nicely today. Relative value. Long-term price appreciation potential is not there according to relative value. And that could have something to do with the fact that the stock is extremely overvalued. Relative safety. This is a bigger company. Relative safety is above 1. Scale of 0 to 2. 1.28 is a safe company. Relative timing, 1.48. Not as high as the other stocks that I looked at on this one, but in an uptrend nonetheless, and could be a good time to enter this position. 1.23 VST when we combine all of these indicators, and this is at a level of above 1, so we're doing pretty well there. Comfort index, excellent on this one. This stock is suitable to withstand lengthy downtrends. Buy recommendation, and growth rate. Growing their earnings at a clip of 20% per year, so I like to see that. And earnings per share is positive. Earnings can be growing but negative, right? So I always like to see and invest in a company when the earnings are growing and they're growing. The growth rate is positive as well. So we just go ahead and take a look at the graphs. We'll pull those up right here. Maximize it this way, right? All right, so we're going to start off with TCNNF, the True Leaf Cannabis.
You can go find your layout, though.
Oh, yeah, let's see. Let's throw our layout on here first, guys. Let's find the Clayton layout. All right. Looks a little more familiar, right? All right, so True Leaf Cannabis. We can see that back here, and I don't have I can see that it was trading below $10 per share right here. It bottomed out in 2020 around $5 per share, and it's up around $45 per share today. So this stock grew about 10 times over throughout the last year. Now, what is one thing that you look at when you're, obviously this is a beautiful equity curve, bottom left to upper right, okay? Growth rate is falling off, but it's still a positive growth rate. I think the growth rate was around, is it 20% per year is what it was trading at? Earnings per share. Now, this is what I like to see. If you're buying a rising stock, I love to see that earnings are rising as well. So earnings, bottom left to upper right, very good when you're going to get into a stock. If you see positive earnings like this, if you see that earnings are growing in this manner, that's always something that I like to see, especially as a more conservative or prudent investor. We want to know that the engine that drives the stock price higher is there. And finally, the comfort index down here, we can see that it's been doing extremely well, especially over about the last 6 months. And I mean, if we look, this stock hasn't had, maybe it pulled back a little bit right here, but it's been trending nice and steadily from bottom left to upper right almost the entire year. Tesla. Now, I know you guys have heard about Tesla, right? Tesla was trading at its low in 2020, around $70 per share, and it's above $850 right now. The stock went up over 10x just in the last year alone. I think like the last 9 months alone. But what do we notice here? The growth rate for earnings is increasing. The growth rate or earnings itself are increasing. The comfort index is extremely high. Now, a lot of people wonder, is Tesla overpriced right now? Well, according to value, yes. But we know this is an industry that is going to continue growing, especially with the new administration, and into the future. I don't think that the electric vehicle and clean energy space, I really think that we're starting to break into it. Glenn, what was that word you used at the beginning of this?
About what?
Environmental infrastructure?
Oh, yeah, environmental infrastructure. That's right. You heard it first here on Hot Stock Panel.
Yes, you did. When that really starts to take off and when that infrastructure is there, I mean, we're really going to see some growth once that takes place. When we talk about electric vehicles, I don't even know where I would charge an electric vehicle unless I, bought a home charger and had to deal with all of that stuff too. I think there may have been one at oh man, I don't even know that store. What's the grocery store that Amazon owns?
Whole Foods.
Whole Foods, yeah. I think I went to a Whole Foods and I saw an electric vehicle charging station there. But other than that,
Dude,
I don't even know.
You go to a hotel now, there's special parking just for the people to charge their cars at every hotel.
Okay. Well, see, that's the kind of stuff that really, once I see that kind of stuff taking place and growing, that infrastructure is there, I think that this industry could grow, at an even faster rate than it is currently. So Tesla, I do believe that this is going to be a good trade. Now, is it going to go up 10x again over the next year? Let's be skeptical about that, right? But I do believe that the growth potential is still there for this company, even though they're as big as they are.
So Clayton,
yeah,
you keep talking about Tesla electric vehicles. That's the thing is everybody talks about that. Nobody talks about the other aspect of Tesla that, both Amazon, Tesla are buying up industries. They're buying up the best performers in industries all across the market. Not only do they have their space program, they have their, the tunnel system that they're doing for transportation. It's everybody keeps talking about Tesla's electric vehicles, but has very, very little impact on what is driving this price so much higher. I think that's definitely something to take into account when you look at Tesla, is that it does pretty much everything that they possibly can do. They're covering all different sectors of the U.S. economy, and they're buying these companies up and growing them, just like Amazon did as well. Take their car battery production, for example, when they announced it early last year. They're buying the whole production, line of production that they do to make their own batteries. They're buying it from start to finish, so that way there's nobody else in between them, so they can get the cheapest possible rates and do it all themselves. So that's something to take into account when looking at Tesla. You see it so overvalued, but that's because, just like with Amazon years ago, they're buying other areas of the U.S. economy, so that way even if electric vehicles aren't the biggest factor for them, they have other areas that will grow and continue to grow and make up for the lack in other areas of their company. So that's something to take into account when looking at Tesla as well.
Yeah, I'm with Paul. SpaceX and Tesla are separate companies. And I think that the reason why people look at Tesla and look at the cars is because if you look at their balance sheet, where are they making all their money? All right, all of the other stuff that you're talking about, Patrick, is right on point. Those are ancillary companies that, and you're right, so that if the electric car goes kaput, they got other stuff to fall back on. But if the electric cars were to go to kaput, they getting smoked. That's where the money is for them. So I think that you say that we talk about Tesla and all we really talk about is the cars, is that's where the crux of the money is made. And I don't know for absolutely sure, but if you look at their balance sheet, I think that if you look at that, I think that that's where the most of their money is. Now, buying up these battery companies and stuff, that's smart business. Yeah. That's really smart business to try to hone in on what they're doing. That's great business.
Yeah, they own their whole supply chain.
Right. Joey's telling me I got to look at the screen. I'm sorry, Joey. Did I just scare the heck out of everybody now? But yeah, I like the idea of the ancillary companies. That is smart business. But I think that the majority of their stuff comes from their cars and batteries.
Well, that's what everybody's focusing on right now, but nobody talks about the other areas, that the industries that they're buying up. And that's something to take into account as well, that, if they're buying up the whole entire production lines and their supply chains and they're making it all internal, I mean, that's going to help reduce their cost, increase their price. And, not only everybody's focusing on this, but right now in the background, they have so many other companies in other sectors of the U.S. economy that, it'll help bring that price easily well above where it's currently at right now.
I got you. Okay.
Oh, yeah. I mean, it's not just cars. They obviously got a whole division for solar panels and equipping your home to be completely electric as well, with home batteries and solar panel installation and different things like that. So Tesla is more than just a car company, but, I think that when this clean energy space, when the environmental infrastructure is there, I'm going to steal your word, Glenn.
I know.
When the environmental infrastructure is there, I mean, we're going to be able to see Tesla just soar even higher. And that's one of the reasons I picked Tesla for the hot stock picks today.
All right.
Now, finally, all right, there we go. Now we're on down to Square. So Square obviously has been around for a very long time. It did suffer a pullback when the coronavirus thing was going on back here. Closed at a low around 39. The low price for the day was $32 per share. And look at it ever since. This stock is almost up 10x. We're trading around $230 today. Now, mobile payments. I said kind of when I first started talking about this, why mobile payments was on my list of one of the stocks that I wanted to get into. And obviously, Generation Z, maybe not just this year. Maybe we're not going to see a ton of innovation in the space this year alone. But with Generation Z growing up, and when they start to turn over and become, some of the big movers in the market, I think that mobile payments and digital assets are really going to see the benefit of that. Now, earnings growth rate, obviously it's come down a little bit from the beginning of the year, but we still do have a very healthy growth rate of around 20% per year. Earnings per share, when stock price is moving higher, I always like to see that earnings per share are moving higher as well. And then, like all of the other stocks, we have a very healthy comfort index right now. And I think it's around 1.80, 1.90, maybe somewhere around there for the comfort index. So this stock is going to be, very suitable for lengthy downturns. But the stop price, VectorVest calculates a stop price on all of the stocks that we track. And anything below the stop price is going to result in a sell signal for the stop. So Square has been above its stop price ever since back here, I don't know, in the April area, and it's been trading nicely above it ever since. And just like with Glenn's, I think 20-day exponential moving average, this stop price has been a very nice level of support as well, and it hasn't crossed below that stop price in roughly, what's it been, 8-9 months now since it's been below there. So this stock is in a healthy uptrend. It's moving higher. It's got the equity curve that I like to see, bottom left to upper right. And we notice it, it hit a high here, pulled back. It hit a high here again, roughly about the same high. Might have had a little bit of an intraday high here and pulled back a little bit. So I do believe that if Square jumps up and is able to break this high right here, we could see it trend even higher in the near future. So I think that wraps up the 3 picks that I had for today. Let's hear what you guys think about Square, and then maybe what do? We give it back to Glenn?
Yeah. All right, so I'm going to start off real quick because when Clayton and I did that Zillennial thing, Square and PayPal are all helping Bitcoin as well. None of us talked about a Bitcoin stock, which I think was kind of interesting. And I know why we didn't, because it is super still speculative, even though it's rocking and rolling. I understand that. I'm not getting into that. But these stocks that take payments are getting into that whole Bitcoin thing. And someone typed in the room, and Clayton talked about it in our session, that you can get Bitcoin on a credit card, something along those lines, right, Clayton?
Yeah, I think I was talking about a lot of the staking platforms that they've got going on right now, where if you use their coin like a bank, and I'm not exactly sure if Bitcoin does it or not, it was some of the Ethereum tokens, but if you use it like a bank, they give you a credit card, and then obviously, you can go make purchases as well. And instead of rewarding you with cash back in, I don't know, US dollars, they reward you with cash back in that token.
In that Coke, yeah. So it's interesting as you pick this stock, which looks really good. That whole, they're getting into the digital payment as well. So Square, not only from the aspect of accepting money, but also helping Bitcoin along the way. So I think that was just a side note, even looking at the equity curve of this stock. Patrick?
So I like Square. I've watched it, traded it, loved Square for a long time. Only cause for concern is temporary. With the talks of a potential 4 to 6 week lockdown again coming up, if that does happen, a lot of Square's, a lot of their money that they make is from people swiping their cards, and most people who use Square are personal or small business owners that use it for all their finances. My wife uses it for her business. So I love what they do. I think it's a great technology, but if we go into lockdowns, people can't spend, people can't go out to the small businesses to swipe their cards. I think that could put a short-term damper in their finances coming up. But if we don't have a lockdown, obviously, people start going out more, especially when weather starts getting nicer. Square could have phenomenal year ahead of them, but if we have rolling lockdowns, or even, the 4 to 6 week lockdown that was talked about just a few weeks ago, that's less money in their pockets by, just the people swiping it for small businesses. So I like it. Square's definitely had some volatility in the past, and it could still do that again if we get into a rolling lockdown phase throughout the beginning of this year.
All right. So Clayton and I, as I mentioned, did do what happens after Generation Z? Do we all just stop living, or there's no more generation? I'm just curious about that. We're at the end of the alphabet. Do we go to Generation AA?
Yeah, I think they must have been calling it, man. I don't know.
I'm just curious to know, what do we do after Generation Z? All right. Well, with that, thank you guys for all being here. Thank you guys for your picks. I think this was a very successful hot stock panel. We all gave our insights, and that's what really is the difference between the YouTube content here and the YouTube content any place else that talks about stocks. So I am proud to be a part of that, and I'm glad to have you guys here with this as well. I will talk about a course that we're getting ready to run. It is called our Options Paycheck course, Breakthrough System to Generate Safe Monthly Income in Any Market. It is an options course that shows you how to get paid playing options on a weekly basis. If that's something you're interested in, go to www.vectorvest.com/check. All right, /check. It is a course, a paid course. If you're interested in it, by all means, please jump on board with it. We got a winner for the cup.
Gary Gold.
Gary Gold. Are you in here? Just type yes, Gary. If you're here, just type yes. All right, Gary Gold. Sigh. You're not here. Roger says, great class, everyone. I've just completed it and learned a bunch. There you go. Jake James, that is not Gary. It's not Gary Gold. All right, we got to reach out to Gary to find out. You know something? I'm going to start making it that in order for you to win the cup, you got to stay here through the whole presentation.
I do it on our Facebook.
Yeah, I think we need to do that.
That is what we do.
Oh, that is what we do. So if he's not here?
I got another one.
All right, hold on. If Gary didn't announce that he's here, Joey's got another one.
What else you need to talk about?
I ain't got nothing. Give me the name.
Gary's on mute.
He's working. All right. No wedgies today, Patrick says.
Not today.
So, glad Jay didn't win. Wow, that's messed up, Robert. So we're going to be working on Clark is too late to type in your mug now. Scotty is too late to put in your mug now. Nope. Joey is going to come up with a second name.
Chris Kuroda.
Chris Kuroda. All right, type a yes in the room. Chris Kuroda. Give it to the next. I know, we got to see if Chris is here. Oh, Lord. Really? Wow.
Come on, Chris, let's go.
That's no, there's no Chris either. All right, so Chris didn't make it. Sorry, Joey. Joey's gonna give me a third one. After the third one, I'm not giving away. How about that? If you ain't here for the third name ain't here, you ain't getting it. All right. What's my third name, Joey?
Eric Lucas.
Eric Lucas.
Oh, Eric Lucas is here. I see him right there.
Eric, there it is. Eric Lucas.
Yeah.
All right, Eric is here. Eric, you have to send an email. My nickname is Chris. No, it ain't, Amir. You have to send an email to.
Connect.
Connect. Just connect?
At VectorVest.
Oh, connect. He's going to type it. Joey's going to type it in the room. Eric, send an email to connect@vectorvest.com. All right. Eric, do that so we can get your cup over to you, your mug. That Joey keeps taking all of mine. Congratulations, Eric. It took me 3 names. If you, I'm gonna start.
I'm glad I picked 3.
Well, he already had 3. If I'm gonna start putting that out there, if you don't stay here for the whole doggone thing, don't put your name in. All right, I'm finna put my foot down as the market gets high from the lows of marijuana.
Sounds like Glenn needs some of that good marijuana right now.
I know you could probably. I don't know. Listen, that's not my thing. All right. So with that, folks, thank you all for being here. Clayton, thank you for being here.
Thank you for having me, Glenn.
Patrick, thank you for being here. And
Always a pleasure.
we're done. So adios, arrivederci, ciao, au revoir, sayonara, aloha, salam, shalom, namaste. Have a great day, folks. Until the next time, see ya.